Good morning, traders. It is 8:02 a.m. Chicago time on the 15th of April, 2015. Reminder, it is tax day. Personal income taxes are due in the U.S. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. Not too much to cover for the on the overnight news. If I can get my notes up here. Chinese data continues its string of disappointing releases, with Q1 GDP hitting its lowest quarterly growth rate since 2009. IMF was just on the line. IMF was due to release its report on global stability, and it reiterates concern over China real estate sector, warns a market collapse could hit other financial markets if it occurs there. API crude inventories yesterday, after the pit close, printed a much smaller build than it previously read. ECB leaves main refi rate unchanged at 0.05% as expected. ECB Draghi saying there's clear evidence that the QE measures are effective. Credit demand has picked up. Last March data shows the economy gaining momentum. And then finally, the Bank of America Q1 report comes in at 27 cents versus 29 cents expected, 21.2 billion in revenue versus 21.5 billion expected. So that's the first of the financial stocks that missed. Looking ahead, where we've got 9 o'clock NAHB Housing Market Index, expected at 9 o'clock Central, 10 Eastern. At the same time, we're looking for a Bank of Canada rate decision and a monetary policy report at 9:30 Central. We have U.S. crude oil inventories expecting 3.5 million. At that same time, gasoline inventory is expected at negative 1.5 million and distillate inventory expected at negative 800,000. Refinery utilization at 1%. At 1 o'clock, we're looking for U.S. Federal Reserve beige book. And then at 3 o'clock Central, we're looking for net long-term tick flows and total net tick flows. That's a measure of money. I believe it's a measure of money coming in and out of the U.S. As far as speakers, as of right now, Fed's Bullard speaking. He's a non-voting hawk. He just released a statement that now may be a good time to start raising rates. There are significant bubble risks if rates are at zero bound for too long, is the comment he released. Again, IMF is releasing its global stability report right now. Let's move on to the technical picture and go over what happened yesterday and what we expect to happen today. Yesterday coming in, we were actually in a gap below when the trader bite was being done, and I had said that there's an expectation. The primary hypothesis is for the market to continue its impulsive move down early, would be my guess. So if we look at where we were yesterday, let me turn this off. If we turn this, if we look back at what we did here yesterday, we could see that the Globex session for Monday night, Tuesday morning, had this impulsive move, and then it was rolling over. By the time I was doing the trader bite, it was rolling over, and we were trading down in the 2083, 2084 area. The market opened, and the indication from the overnight structure is that it's likely to continue its leg down, that this 79 quarters in jeopardy. And so I expected on the open, since we were in a gap, I expected that it's likely to be an OAOR opening type, open auction out of range, meaning two-sided trade. and then I expected it to roll over and take out that 79 quarter early, and then I expected responsive buying to come back in and push towards the 93 half area at some point. Um, what actually happened yesterday was we opened and we immediately went up. So here we have an open. We had a quick test down, so we opened, went up to the next bar, pushed down, and then we immediately went up to 90. And then we got the rotation down, and the way it was trading, and we're seeing this pretty much every day, by the way. If you scroll through a chart, a short-term chart, you'll see that the IBs have been wider than usual last week and so on, that there's a push early on that fizzles. And I did comment on Twitter, for those who follow, I did comment that it's likely to fizzle out right at the open. I said that it's very strong, but it's likely to fizzle out to rotate down. It's still looking for hypo 1 test lower through that 79 quarter area, and we did get that. We pushed right to value low, although the prior day did not really show balance, but it traded into this closing swing high value low area. I would not have guessed that that would be the area it would stop. This is also the LVN area from the last Friday, and then it rolled over and pushed down into 75.75. Recall that 76.50 has been a key level in the bigger picture over time, and it's one of it was an over/under line for quite a bit of time here. If we look at the composite, it's filled in. Given all of this trading that has occurred here, it's filled in quite a bit, but we did push 3 ticks through that down to 75.75, and then started to get these long wicks on the 15-minute and began to rotate up. The initial push up was expected to mid. Mid gave us confluence yesterday with the opening swing low here of 82.75 and VWAP. So I was looking for a short at mid for a rotation down back into the 75.75. Could not get back up there, and then on the second go, I did warn the traders at stage 5 that to pass on the mid setup, and that's what it did. It breached the opening swing and went right to the opening swing high right here at 88 and quarter. Remember, we put that opening swing high on the open. This was the first rotation down on the run up at 88 quarter, and that was respected. Pulls back and then pushes through. What we ended up with yesterday is a weak high with multiple tags at 92, and it leaves us with a strong possibility of continuation overnight. This yet again, and I know I've said this over the last couple of trader bites, yet again we have a market that has not completed its auction. So the prior day it did not complete its auction down, and then yesterday it did not complete its auction up. So the expectation is for it to continue overnight, and then for the day session to further confirm the likelihood that the market will continue. So you can see here we reopened for the 45 minutes, went sideways, pulled back a bit on the overnight, but then exploded upwards. This was about the same time that the Bund was making the German 10-year yield was making lows. So it's driven by European trading here, and it has continued to go higher. Looking at the overnight chart, looks like we have some decent support at the 92 high that we put in yesterday. So I'm watching for that, but as a key hypothesis for this morning, the target for yesterday, if we had continued, would have been this naked point of control at 98.50, which we're trading at right now. Again, the overnight high is put in at 20.99 and a quarter. The FOMC high, I talked about this level several times. It keeps popping in. Why do I have two of these? The FOMC high is, the FOMC day high versus the FOMC release high. And I have talked about the 90 FOMC release high. So anyway, um, so I'm looking at this, and I believe that again we're out of range from the prior day, and we are in range and in balance overall. We're still in that triangle, that big triangle. We have broken below this rising wedge, which is a bearish formation generally. We've broken below it and came right back up yesterday. And it looks like we're continuing to ride this wedge into the triangle. So the market looks like it's ready to attack 2107 and new highs 2110, with 2120 and 2123 being the key targets above. It's about 10 points up from the all-time high that we have. So this morning I'm looking for an OAOR open again because we are in balance. We'll see what happens. Our opens have been very strong lately. So you look at this opening bar, vertical up, vertical up. These opening bars, this one struggled a little bit, but this bar here is vertical up. It only went down 2 ticks and it went vertically up. It seems like there's a lot of money coming into the markets every day. Like there's a buy program that's buying up wherever we are when we open. But you can see that even going back to last week, vertical up and then rolls over, vertical up and rolls over. It's just a repeating pattern that we have had. Here's vertical up and then it rolls over and retests, and then this one is turned out to be a trending day. So it's hard to tell, but under normal auction conditions, this would likely be an open auction out of range, meaning two-sided trading, a tag of 99.25 to complete the overnight test. And then it likely to rotate back down to 92 before it starts to base and come back up into the 2103. So that's my primary hypothesis, is to look at this and consider that it's likely to initially take out the 99.25 either way, fizzle out, and then start to roll over back into 92 before it finds a base and then continues higher at 2103. That's what I'm looking for this morning on the ES. We'll see how it plays out. A quick look at the Euro stocks. Yesterday I mentioned that I'm looking for this to roll over and test 3703. Took a while, but right after the open here, it did push to 3700. It pushed through by 3 ticks before it found a base and rotated up 28 ticks. Beautiful trade in there. That worked out very nicely. So it was finally the Euro stocks are getting a little bit more range. It's pretty dead for an ECB day so far. Crude oil, I talked about starting last week. Right back in here, I talked about the strong potential for a test of 55.09. It popped up, and then it has pulled back to 50.08, and now it's trending up, and it's starting to look like it is going to attain that goal. I talked about 55.09 likely this week, so that's what I'm looking for in there. Still sitting and waiting on that one. That's all I had for you. Hopefully you're benefiting from this. Good luck, and I'll catch you tomorrow. Take care.